On April 28th, the United Arab Emirates dropped an absolute bombshell on the global energy market. Seriously, out of nowhere. After exactly 59 years as a core foundational member of OPEC, they suddenly announced they were out. No warning, no quiet consultation with their closest allies, just a direct, ruthless exit, instantly dumping millions of barrels of potential supply onto the global market. Now, the immediate expectation? A catastrophic, totally predictable crash in global oil prices. But that's not what happened. The exact opposite happened. Instead of crashing, oil prices spiked. Brent crude jumped 2.8% to near $111 a barrel, and WTI smashed right past that $100 mark. Welcome to this explainer. Okay, let's dive right into this and figure out exactly how the UAE just triggered what is arguably the biggest geopolitical earthquake of the decade.
So you've really got to ask yourself this question. Why on earth did oil prices spike when supply actually increased? I mean, it goes against every single rule of basic economics, right? Well, the answer lies in physical reality completely overriding market logic. Right now, there is a physical, extreme blockade happening at the Strait of Hormuz. And because of this blockade, the market logic shifts entirely. Traders realize that, even if the UAE pumps millions of extra barrels, as long as that strait is locked down, those barrels simply cannot reach the open ocean. So this extreme, short-term physical panic just completely overwhelmed the long-term supply increase.
And we really need to understand that this wasn't just some minor player throwing a tantrum. 59. That is the exact number of years the UAE spent in OPEC. They controlled 12% of total production and held nearly a quarter of the entire group's spare capacity. Think about that. When a member with that kind of historical weight and massive production power suddenly exits without even giving a heads up to their Saudi neighbors at a Gulf Cooperation Council summit on the very same day, that is not a market glitch. That is a calculated, totally unceremonious public break.
To understand why the UAE chose this exact moment for what is essentially a nuclear option, we need to look at the three ledgers, decoding the geopolitical master plan. We're talking about three deeply rooted, irreconcilable differences: the political, the economic, and the strategic.
Let's crack open that first ledger, the political. And this perfectly illustrates the total, absolute collapse of security trust. Following the widespread Middle East conflicts that erupted back in early 2026, the UAE felt entirely abandoned by its Arab brothers. They were facing frequent drone and missile attacks from Iran, and they quickly realized that collective security was just a myth. Anwar Gargash, a top diplomatic advisor to the UAE president, made this incredibly rare, blistering public statement. He literally said the Gulf Cooperation Council's political and military performance was the weakest in history. They realized that in a true crisis, being tied to a collective decision-making group just drags you down.
And honestly, the cracks go even deeper directly with Saudi Arabia. By late 2025, regional proxy tensions just completely boiled over when Saudi Arabia launched airstrikes on a port in Yemen, destroying weapons that were allegedly supplied by the UAE to southern separatists. The UAE's response? Immediate withdrawal from Yemen, condemning the strikes. The UAE leadership essentially looked at the chessboard and realized something huge. Staying in an organization dominated by Saudi Arabia and heavily influenced by Russia, who is a close ally of Iran, was now a direct threat to their own national security.
But as we all know, political anger alone doesn't pay the bills. So let's move over to the second ledger, the economic bleeding, or what we're calling billions lost in the quota trap. Here is the fundamental problem. Saudi Arabia and the UAE want completely different things from a barrel of oil. Right now, Saudi Arabia is funding massive, sci-fi-level trillion-dollar megaprojects like NEOM. To balance their budget and cover this huge $73.6 billion deficit they had in 2025, Saudi Arabia absolutely needs oil prices sky high. We're talking between $108 and $111 a barrel. They are desperate enough to slash their own production just to keep prices artificially up. The UAE, on the flip side, they have some of the lowest extraction costs on the planet and a highly diversified economy. They don't need record high prices at all, they just need volume. They want to pump massive amounts of oil to generate heavy cash flow for their global investments.
Now, the math here is absolutely staggering. Over the last decade, the Abu Dhabi National Oil Company, ADNOC, spent tens of billions of dollars building up infrastructure to reach a maximum daily capacity of 4.85 million barrels. But because of OPEC's strict quotas, which were largely designed to keep Saudi Arabia happy, the UAE was forced to keep production capped around 3.5 million barrels. That means every single day, over 1.3 million barrels of premium, high-quality production capacity just sat there, totally idle, wasted. At pre-conflict prices, that quota trap was costing the UAE tens of billions of dollars every single year. They were literally bleeding cash just to plug Saudi Arabia's budget holes.
Which actually brings me to a huge question for you all.
With the UAE breaking rank to flood the market like this, do you think Saudi Arabia will retaliate by opening their own taps to launch a punishing price war, kind of like what we saw back in 2014 and 2020? I really want to know what you guys think, so drop your theories in the comments below. I read every single one.
All right, let's keep moving. Now that we've seen the severe financial bleeding, let's open up the third and final ledger, funding the post-oil era, otherwise known as the strategic ledger.
The UAE leadership has basically had this doomsday realization. The era of oil is ending. Peak demand is coming, and it's coming fast. So their strategy here is brilliantly ruthless. They've entered full doomsday mode. The plan is to pump as much oil as fast as humanly possible right now, turn it all into hard cash, and use that cash to fund a massive green energy transformation. By breaking free of those OPEC quotas, the UAE is finally unlocking the funds they need to invest 200 billion dirhams into renewables by 2030, produce 1.4 million tons of low-carbon hydrogen by 2031, and ultimately hit net zero by 2050. Leaving OPEC isn't just about selling more oil, it's literally the funding mechanism for their survival in the next century.
And you have to admit, the geopolitical timing is just perfect. By dismantling OPEC from the inside, the UAE is handing a massive political victory to the United States. It perfectly aligns with Washington's aggressive push against OPEC monopolies and their ongoing fight against inflation. And in return for this massive gift, the UAE is securing its own financial safety nets. They've already gone ahead and signed currency swap agreements with Bahrain, and the U.S. Treasury is reportedly considering providing vital U.S. dollar liquidity swaps to stabilize Gulf financial markets. It's just an incredible strategic trade-off.
But wait, let's loop back to our earlier question for a second. If the Strait of Hormuz is completely locked down, how can the UAE even export this extra oil they're planning to pump? Well, let's look at the UAE's secret trump card, bypassing the blockade.
Say hello to Fujairah. While the rest of OPEC is basically choked off inside the Persian Gulf, Fujairah is the only UAE emirate located entirely outside the Strait of Hormuz. It directly faces the Gulf of Oman and the open ocean. We're talking about a port with over 10 million cubic meters of massive storage capacity, and it's already the world's second-largest ship refueling hub. Geographically speaking, it is the ultimate ace up the UAE's sleeve.
And to make absolutely sure they can use this geographic ace, the UAE had previously spent $3.3 billion building the ADCOP pipeline. This is a 400-kilometer strategic lifeline that cuts straight across the desert and mountains, safely carrying up to 1.8 million barrels of crude every single day directly into Fujairah. So, while more than half of OPEC's total oil is trapped by the blockade, the UAE can safely bypass that choke point entirely. Even in an extreme market where oil is sitting at $110 a barrel, securely selling 1.8 million barrels a day guarantees the UAE an unmatched, practically invincible stream of cash flow.
But remember, that's just during the blockade. What happens once the geopolitical situation cools down and the Strait of Hormuz finally reopens? Well, the UAE has 5 million barrels of daily capacity ready to unleash like a flood onto the global market. And get this, Oxford Economics estimates that if they sustain that massive output, it could trigger a theoretical 20% explosive jump in their oil GDP. They are perfectly positioned to just absorb market share the very second those gates open.
So, what does this aggressive, go-it-alone strategy mean for the rest of the world? It brings us to our final point today, the end of OPEC and how global pricing power shifts. When you break down OPEC's historic spare capacity, you realize that their true superpower has always been acting as the global shock absorber, right? If prices fall, they all agree to cut production. If prices spike, a few core members use their idle capacity to pump more and stabilize things. But removing the UAE rips away roughly 1.5 million barrels of high-quality, readily available spare capacity from that equation. Without the UAE, OPEC's ability to actually manage global markets and effectively cushion supply shocks is fundamentally destroyed.
And you know, the domino effect of this is going to be devastating. Over the years, sure, minor players like Qatar, Ecuador, and Angola have left OPEC. But the UAE, they are a founding core Gulf powerhouse. Their exit breaks a massive psychological taboo. As the remaining members sit there and watch the UAE freely capture huge chunks of market share, the temptation to secretly cheat on their own quotas is going to become irresistible. It's going to rot the cartel from the inside out. Ultimately, this shifts global pricing power entirely away from those quiet conference rooms in Vienna, handing it directly to independent, marginal-cost producers like U.S. shale and Brazilian deepwater operators.
So, the absolute crucial takeaway here is this. The UAE basically just traded half a century of loyalty for a golden ticket to the final, post-oil boom. And by doing so, they have fundamentally rewritten the rules of global energy forever. Are we literally witnessing the final days of OPEC? Is this the start of a ruthless free-for-all in the global oil markets? I really want to hear your thoughts down below. If you found this explainer valuable and you want to keep decoding the complex forces shaping our world, make sure to hit that subscribe button. Thanks so much for learning with me today, and I'll catch you in the next explainer.